Morning, Matt. My name's Stewart. Pleasure to see you again. I'm the CEO and chairman of QC Copper and Gold, and today we're here to talk to you about the big news that just came out earlier this week, which was our maiden resource report on the Opemiska Copper Mine Complex. The global envelope was 104 million tons of copper equivalent at an average grade of 0.85% copper, and really. Tomorrow was all about the story of growth. Okay, so Monday we defined how large this is. Going forward, we're going to see how big we can get it. We know where this mineralization is. It's in our model. We just need more drilling. So we're shifting our focus really on two folds. One is how are we going to make this twice as big? And secondly, we realized this a long time ago, but as of Monday, we've been able to define to the market that this is going to be a mine. So it's really a change of focus, and we're thinking long-term, what foundations do we have to lay down in order to prepare ourselves to go into production down the road? Because that's where this is going. This is Quebec's next copper mine, and there's very few comparables like it.
Okay, Steve, I could have you back on the show. Obviously, we were talking about this story back in June, and you had a bit of work to do. I saw the press release, and I do want to get into that, but you're talking the language of being a miner. You're a 32 million market cap company. Can you really justify that statement?
Of course we can. I mean, look, it's just the beginning. I mean, QC Copper has been off the radar, except for Monday. Monday was our arrival. We just arrived at the big dance, and we came out with big numbers, high confidence numbers, high grade numbers, pit constrained, conservative estimates. 82% of that is in the measured and indicated category. We're leveraging a huge database we inherited from Falconbridge, which is high quality. We expanded upon it. We verified the data. We expanded upon it. We filled in the gaps. And we came out with 2 billion pounds of copper. That cannot be ignored. That is $8.3 billion worth of gross metal value in the ground, on the rail, on a paved highway in the heart of Quebec. It doesn't get more interesting than that. I mean, there are very few initial resources that come out with that scale. It takes time for that information to be absorbed and understood. I also think while everybody's interested in copper, few understand the metrics and how that translates. Everybody understands gold. Everybody understands a 5 million ounce, 1 gram deposit. That's sort of the de facto sort of standard. But if you convert 2 billion pounds of copper at 0.85 copper equivalent, convert that into gold, that's 4.75 million ounces of gold at a 1.4 gram per ton deposit. That's apples to apples. That's in line with the first resource that Malartic came out with back, got to be 15 years ago. Did they grow it? Absolutely. So we're following that game plan. There's a lot of similarities. We're in Quebec. They had a high-grade underground mine. We had a high-grade underground mine. Nobody believed them. Hell, they bought it for $80,000 from Barrick, who are supposed to be the best miners in the world. They are, but everybody overlooks opportunities. The Opemiska sat idle for 30 years, and nobody recognized the value until Charles Beaudry, my VPX, had been bugging me for years to take a run at this, and it wasn't until we had the right timing, opportunity, vehicle to run at it and acquire it. And so nobody believed us until Monday. I mean, there were a few. Don't get me wrong. There's a lot of smart people who saw what we had, but we couldn't talk about it publicly until we had the 43-101, which came out a few days ago. We've nearly doubled in price since then. And I think we've got a long way to go. Maybe not double. I see you smirking at me there. But what are we up? 18 cents, and we're
50%.
We're now,
I'll give you 50%.
50%, 100%. So look, we've had a great run. We've had 20 million shares traded. I guess what I was implying, our enterprise value has doubled because we've got $15 million worth of shares of baseload energy as a sort of kicker, including our cash. So really prior, call it last Friday, we were getting zero value for the Opemiska. It just doesn't make any sense. But hey, the juniors are the most inefficient market in the world, bar none, to the upside and the downside. And this time, obviously, we think we're mispriced to the downside.
Well, you reminded me of something there. Obviously, you've got the baseload shares, and perhaps you may or may not be right in terms of how you were being valued in terms of apportionment for baseload, because they've got a few issues. They've got a few problems at the moment we need to talk about at some point. And obviously, you were waiting to get to this point. You made resource what you needed to do. You've had a pop, and a nice pop at that, but it's still not enough. It's still nowhere near enough. And my point to you is about small companies talking about the language of becoming miners. You've got to understand the path to get there. And I want to hear from you. How do you get there without diluting the heck out of your shareholders?
Step by step. I mean, look, I'm not thinking about, becoming a miner. I'm telling you, this is a mine, and it will be a mine. Okay. There's little doubt in that. We are 3 or 4 days into this. So it's early days. We've had an awful lot of attention. I think, there are people who haven't even heard of us still. And those who are looking for copper stories are going to find out about us, and they're going to think, interesting. And so we've got lots of time to continue to build the story. It's guys like you who get us into, around the world and get us eyeballs. That's my job right now. I'm trying to stand on the top of a mountaintop and explain the delta in price and value. And that's where we are. We think we've got, look, it's step by step. We're up 50%. I think the closest comparable, bold statement is going to be $700-800 million market cap. Look at Marathon. I mean, I referenced, we're almost 5 million ounces of gold equivalent, 1.4 grams per ton. We're not too far off their metrics, and we have measured and indicated. This is not an inferred resource, Matt. This is a measured and indicated resource. Do the comps. Do we have a ways to go? Sure, but that's the direction I'm going to take this company.
But I'm interested at the moment. You look at what copper price has done this year. Pretty. What are we over 430, 425, 430, something like that, right?
Something like that.
It's moved. Copper juniors have not moved. I've had maybe a couple of handfuls on here in the last 3 or 4 months, and they're where you are. They've kind of moved sideways or moved down, and no one's really paying attention because the retail perception of copper projects is they need to be big. You need scale for the economics to be there. Do you think? I mean, obviously, £2 billion is a lot of copper. How do you think you get over that hump for retail so that they think that this thing does have a chance of actually moving forward and, as you say, become a growth story, because it's moved sideways in a really, really positive marketplace? So what have you got to do?
Well, continue talking about this. Look, the whole copper market has been quiet the last 6 months. Copper ran last year in the last quarter. When we did our financing for the 20,000 meters, we hit 33 cents afterwards. We were a higher market cap than we are today after we came out with 2 billion pounds of copper. So, I mean, that's how quickly the market can change and how sort of volatile and inefficient it is. Were we more valuable in November than we are now? Certainly not. But the market said we were. The market was wrong. So look, I don't compare ourselves to any of the other copper juniors out there because, again, they're just mispriced by and large. Look, we're focusing on what we have. We look at the details: 2 billion pounds of copper, high grade, high confidence, huge upsize. Okay, so we know how small this is. It's 2 billion pounds, and that's not small, Matt. We're gonna push for 4 billion pounds. I mean, that's what we're aiming for here. That is, as always, a forward-looking statement by the CEO. But we see it. We see it in the model. Everything we've discussed in this report, those nearly 2 billion pounds, are just on 2 of the 4 mines on the Opemiska. We haven't even touched the 3rd. We haven't touched the 4th, the Robotai and the Cook. And then we've got our satellite deposit, which is called the Roger, which we acquired earlier this year, 500,000 ounces at a gram on the rail. We can ship it. If you include those tons, we've got 120 million tons. So we're a big little copper company with big ambitions, and we're not just blowing smoke. Go to our presentation, look at our geologic model, see what's pit constrained within the boundaries, and you can see right there's a huge amount. I mean, just visually, it looks like there's double the amount of mineralization just in and around the pit constraints. It needs more drilling. It's open at depth. We know that when Falconbridge shut this mine down in the early 90s, they left proven and probable reserves of 3 million tons of copper at nearly 3% underground. It's not in our resource. We had probably our best and flashiest drill intersection in our saddle zone, which didn't even make it into the pit. We drilled 9 meters at 18 grams gold. That surprised us. No copper, just a sort of an isolated gold shoot. Very interesting to us. Certainly going to be part of our follow-up drill program coming, but that's not included in the pit. So everything I'm talking about, there's just so much work to do.
Okay, so look, the press release is good. The copper grades are good. You're talking £2 billion to £4 billion. You got to fund this. Okay, you've got to fund this in the most efficient way possible. You can either offload base load shares, which is going to cripple them. They're part of your portfolio. You're probably loath to do that. Or you're going to have to go out and raise money at these sorts of prices. So how do you fund that growth?
Well, look, again, step by step, we're not getting too far ahead of us. We're not building a $500 million mine tomorrow. So it's not that sort of
Tell me what step by step means. I mean, do you go and raise a little bit of money now to advance it and just move the story forward, wait for the copper market to come back next year? I mean, how do you play it?
No, we don't. Look, we don't wait for the copper market. That's not a strategy. We've got a resource here that is going to be a mine. And so we're going to look to de-risk it, grow it, and develop it, and lay the foundation for all the elements that you need in order to be a mine. So that's our focus. How do we fund that? Well, we've got $3 million in cash, so we're not that rich. We've got $15 million in base load shares. We'll sell that when the time is right. Our group has raised, I can't even tell you how much money, but tens and tens of millions of dollars in the last 6 to 12 months, $50-60 million. So, there's access to capital. I've had all sorts of phone calls.
There's a different market.
We can raise money.
There's a different market, Steve. Last year was a different market. Anyone who wanted to get funded could get funded, it seems. I've spoken to enough companies this past 3-4 months, and it's like the doors are shut. So how do you, as a small company, do?
Not true. I raised $6 million. I raised $6 million in 24 hours for my nickel company last week. Last week. 2 weeks ago, I raised $7.5 million for baseload energy. I mean, the doors aren't closed, Matt. I mean, do you not think I can raise as much money in this company as I want today?
Okay, so give me some detail.
Price?
Give me some detail. What are you going to?
Well, there is no detail because I haven't done it yet. I mean, we're thinking about it always. I mean, that is a constant consideration. Is our access to capital, but mostly it's cost. What do I have to give away at what terms? Look, I think we're a really good looking girl at the dance here. Okay. So we have a lot of suitors and, we're going to take our time and we're going to be choosy about what we do. So we don't feel the need to go out and rush and do the first deal that comes across our plate. We want to do it right. And we will.
So who's asking you for a dance?
Lots of people. Look, as you know, people are looking for copper deals. Find me a comparable copper deal that isn't in a very risky jurisdiction. There are no comparables to us, Matt. Not a single one in terms of jurisdiction, grade, size, confidence, and then infrastructure. Let's talk about how copper needs to be super big. Well, yeah, bigger is better, all else equal in mining. But why do base metal projects need to be so big? Because usually they're in the middle of nowhere and you have to build a $1 billion rail. We don't have to do that. The rail comes to our project. We don't have to build a road. We ship clean concentrate right to the Horn smelter, which is down, it's on the rail. So we can ship it there or we can ship it to Tidewater. This project, as we've always said, has the ability to be fast tracked and developed in this cycle. Some of these massive porphyries, and I get, envy when I see kilometer intersections at 1% copper. Wow, fantastic, very exciting stuff. That's the future, but that's not this cycle, Matt. That's next cycle. We're this cycle. We have that opportunity.
Okay, so you're not going to tell me how much money you're thinking of raising or when. So remind me how much cash you've got again?
$3 million in cash.
$3 million in cash. Where does that get you? How long does that last?
Well, I mean, look, we wouldn't launch a drill program on the back of $3 million. I always believe in raising money when you don't need it. So, before we come out, look, I think we haven't fully designed our next drill program, but, don't be surprised if it's between, 50 and 75,000 meters. I mean, that's what this project warrants. Okay. Maybe more. And round figures, look, just give me some time. I'll show investors how we're going to finance our path forward. I promise.
By when?
In the near term.
In the near term, this side of Christmas.
Absolutely.
Okay. Fine. Well, let's wait for you to do that. So just on baseload shares, you'll get rid of them at the most opportune time. What does that actually mean?
When we maximize value, I mean, you're absolutely right. We hold a position that, as a block, is illiquid. We can't monetize nearly 19 million shares in the market. That does nobody any favor. Certainly not baseload, but certainly not QC Copper, who's a major owner of that position. There are suitors. Uranium is hot. You know that. There are people that follow James Sykes, brilliant young geologist. Has 12 million in the bank, has 3 properties in the Athabasca, is on site as we speak drilling, going to have another drill program. Look, one drill intersection from Mr. Sykes is going to blow the roof off that thing. And then we have all sorts of opportunities. So look, my fiduciary responsibility is to QC Copper in those positions there. So when the time is right, expect that to be monetized. I mean, look, we're not sitting on it just because we like James, okay? We're sitting on it because we're a strategic investor. QC Copper made a really good corporate transaction. Look, the cost, we sold a non-core asset that we were never going to pay attention to baseload in order to get that position. We sold that at $1 million, now it's worth 15. Not too bad.
Yeah. Okay. Well, look, Stephen, I guess we're going to have to wait till you come back to us with the drill plan and how you fund it. You sometime between now and Christmas. Grades are good. Scales there. Do you feel that the market's probably going to again not give you credit until you do put out some kind of scoping study that whether the economics are a little bit clearer for people to understand? Because there's pounds in the ground and then there's economic pounds on surface. So you've got to get that right, haven't you?
Look, I'll tell you a little secret. These scoping studies, these PEA, those are for the retail investors. Okay. Anybody who's going to buy this project doesn't care about my PEA or anybody else's PEA. Do you think that do you think that Rio cares about a PEA? No, they don't. They've got they do their own PEA. Okay. And that's who's going to buy this thing, I think, is a big mining company. So, and I'll tell you right now, you talked about copper's flat. So why would I put out a retail based report and nobody cares about it? So like, I don't care, that's not what this is about. And honestly, if I started defining the engineering and the economics of something that I know is half baked, in the sense that, look, we think this is going to get twice the size. So why are we going through the exercise, which doesn't add value, as I was just describing, on half of the asset? Makes no sense. So when we figured out how much bigger this is going to get, we said, look, we got to drill this out. So that's where our mind is.
Okay, so right, give us a little bit of industry insight. The PEAs are just for retail. How do you manage the negotiations with a buyer? Whatever mid-tier comes in and looks at this thing and thinks, you know what, I've seen your drill results, I've looked at the core, it's our kind of thing. We believe that we can do something with this, and you're still sitting at 30 million market cap. Who's the winner then?
Well, look, I'm not all that interested in entertaining offers from so-called strategics at this point. As I said, I'm the best looking girl at the copper ball right now, and I don't really want to get married to my Prince Charming. I want to sow my wild oats a little bit and keep on going this independently, so to speak. As I said, like, why would we bring in a strategic at $30 million? Doesn't make much sense. We know what this is. Okay, we know where it's going. It just takes time. It takes more money. And look, if I couldn't raise any money, I'd bring in a strategic. But look, that's not
my point, Stephen. I get it. You don't want to take it now. You don't want to take it now. It's not. It's difficult. I'm talking about at the point where you come and sit down, have a negotiation with a strategic partner, mid-tier, whatever. They're gonna say, well, hey, your market cap is this. However you want to have those. But you're going to tell us how you have those negotiations, because the market's valuing you at, I'll be generous, 100 million at that point. You think this thing's worth 500 million. That's a difficult conversation to have with a strategic partner, isn't it?
Well, sure. I mean, look, we're in a sense we are worth.
What do you do?
We say come back at a later time. I mean, look, it's we're not going to undersell this thing. It's the bottom line. So we know what it's worth. I can show comparables. I mean, this asset is real. So, and the market takes time. I mean, I think you're caught up in what our market cap is today. It means nothing to me, Matt. Okay. I'm thinking about where our market cap is in 12 months' time. That's the goal. I don't need anybody else. Okay. We just need to focus on the asset that we have and that we've defined. We know where this is going to get bigger. We know how we're going to do it. We've done it, taken it to this point. It's just the beginning. So I'm not worried about selling it. I'm worried about getting it bigger. I hope the copper market, continues on its path. All the so-called experts say it will. That's, if they want to read, if that's what tea leaves say, so be it. Nonetheless, we are going to have, I think, the best copper asset that's not owned by a big guy in Canada at the end of next year. I mean, I think we have it right now, but we're just going to we're going to stand out that much more after this next drill program.
But you do, so my point, I'm just trying to understand how you think. I know you don't care about a lot of stuff you've said. I don't care about a bunch of stuff there, but you've got to care about what retail can do for you. And you've got to enable them. You've got to arm them with the facts to give you the value that you think you deserve, which will in turn arm you to have a conversation with a strategic at the point that you want to have that discussion. So you need to kind of care about what the retail think, because they could help you. And of
course I care.
The question is, what do you give them to be able to value this? Because at the moment, if they look at these drill results, you're doing that for the potential buyer. Do you think retail's going to be able to interpret what good looks like from drill results?
I pay a huge amount of attention to retail. I came from retail. Okay. That's how I made my career, is financing myself and communicating with the retail investors. I care very much. I don't care about our market cap today because it's irrelevant and it's wrong. I care very much about retail, and I communicate with them, and I'm going to just tell them the facts. Look at the comparables. I mean, the junior mining industry is really difficult to price. And so you can only really do that by comparables. I like to point, as I said before, to Marathon, $800 million market cap. Okay. They are a little bit bigger in terms of size. They're a little bit higher grade marginally. But they are what? 25x us. That's the best comparable in Canada.
They're a good company. They're a good company.
Excellent company. Great jurisdiction. Good people. I know the guys that put it together. Huge success story. That will be a mine. So will we. They're 18 months, 2 years ahead of us.
Should we leave it there?
Early days.
Should we leave it there?
Early days. Early days.
Okay.
I'll come back. Look, when we've got lots of cash in the kitty, and I promise you we will, we'll come back. By then we'll have our drill program fully delineated. I'll tell you exactly where we're going to poke the holes and when. And the picture will be clear. But for now, the facts are we've got 2 billion pounds of copper. That's $8.3 billion pit constrained in the ground on the rail in Quebec. Nowhere else I'd rather be. We're thrilled.